Thank you, my dear Allah. What a joy to be integral part of an interesting and exciting content, payments and cash management innovation. And the combination of speakers, as Allah has outlined, has been extraordinary. And it's going to be a good treat to the audience, I can reassure you. We live in changing times, extraordinary set of transformation is happening in every spheres, on the political side, on the social front, the economic front, environmental front, and the human development front. The world is changing for good, while the tragic impact of the COVID-19 has been very much conceived and recognized. Now we have to understand how do we take this transition and transform the way forward. That should be our motto. We have to create better world and better citizenship to this world. That's the purpose. With this perspective in mind, we have to recognize that huge transformation is taking place in global space. Technology and innovation is redefining the changing world. Now, if you look at the technology and payment side, the digital accelerations which we are seeing on account of the COVID-19 is one aspect. I'll come to in a minute. Technology impact on the banking side, for example, financial services, or for the matter, technology impact on the payment side. And a combination of these two is redefining the way the customer is behaving, the way we need to customize the solutions. The open banking on payments, and again, digital innovation through application programming interfaces are all mind-boggling. The pace at which this acceleration is taking place is something which is unbelievable. Add to that the fintech. The role of fintech in the payment industry has been so prolific and a value advantage in every sphere in terms of human endeavors. The cash management systems, and again, what you call as transaction banking, as bankers, we look at it with the nomenclature transaction banking because it is so compulsive for us to recognize this transformation and the digital tools which are available to redefine the business model has been a great enabler for us to have a very successful transformation. Payments and cash management are interconnected again. And how do you make sure you have a dynamic cash flow forecasting in this way forward? And what are the ways and means by which the payment hubs are getting created? And how do we make sure the liquidity and the treasury management we are all going to do is a subject of huge deliberations. Now, if you look at the big picture, the biggest discovery of the century is to recognize human beings are capable of redefining themselves with altering their mind with a changing environment. And that's precisely has happened. Now, COVID has given us enough compulsion for us to realize it's not over yet. Global cases, even as we speak, it's around 220 million, and we lost nearly 4.55 million people. That's not small. In terms of vaccination, we have 2.65 billion people have been administered. That tantamount to nearly 34%. Now, when it comes to the Qatar in specific terms, Qatar's governance has been prolific, and they have done governance, social governance, human governance, and the environment governance. It has been well managed. We never had a full lockdown. There were no major panic, and we redefined our business model. The banking system has worked. The financial stability has been showcased. Again, when it comes to the overall productivity, we are second to none. And we scaled up our LNG consumption and production. And we are also making sure the way forward in terms of energy efficient, environment friendly. LNG is cutting across nearly 127 million metric ton in the next 6 years. That's huge. The oil or gas or petrochemicals is going to be a major revenue spinner. With the changing face of the world in terms of global warming and climate change, The energy security is a major concern for emerging markets. They're all focusing on redefining towards natural gas. It doesn't mean that we don't have our own challenge. Qatar lost nearly 607 people. We had an impact of nearly 237,000 people, again, in terms of COVID-19. Vaccination eligible population is around 85%. Total population, we have done already 2.2 million. That's equivalent to 77%. Now, in specific terms, when it comes to the International Monetary Fund space, the global economic indication, which was a contraction last year, has been realigned with a positive momentum. Everyone thought by end of 2019, COVID is over. That's not the case. Now, still we are experimenting with solutions, and there are multiple variants are cropping up. We're all mapping all these risks, as I said, in multiple form and substance. Now, global growth has been redefined in October last year. It was redefined in January this year again by IMF as well as World Bank. We set a new momentum again, looking at the pace at which vaccination has been administered. Spring meeting in April, we recasted the numbers. Add to that, in July, the number goes with a different perspective. That global growth has been set as 6% in total terms. From the total downturn, there's a definite jump, whether trade or investments, banking or finance. Economic momentum has been augmenting in the right direction. Now, in direct terms, advanced economies are consolidating because the vaccination has been super efficient. And now we are seeing around 5.6% in aggregate terms. We can deliver the momentum. When it comes to emerging markets, where the incremental productivity comes over 60%, it slowed down a bit because vaccination is not at the same pace at which advanced economies are performing. So we have to scale down to 6.3% as against original projection of 6.6%. Middle East and Central Asia should be doing around 4.1%. That's the trend. Now, specific terms of the concept which me and my colleagues are going to share across, very interesting to see. The technology-driven projection, the impact on the banking on account of the fourth industrial revolution. We have seen the sequence of first industrial revolution from locomotive, and again, electricity assembly, and in the second phase, then we got into the PCs and mainframe computers. That's a third phase. The fourth one is so interesting, it changed the quality of the personal life and professional advantage. And that's what exactly we need to conceive. Watch this clip, which must be interesting to you all.
Decade goes so fast. Within the last 10 years, technology's changed the way we bank, mostly connected to our phones. But by 2030, the everyday banking experience could be entirely virtual. By then, more than 2 billion people will have digital bank accounts on digital platforms. And just 20% of so-called heritage financial services firms will have survived. Some banks will be completely virtual, facilitated by open banking, fueled by data stored and shared on the cloud, and made faster and safer by blockchain technology. If you want, you'll be able to get the equivalent of a private banking service, as data aggregators cross-reference your spending habits with other parts of your online life, from your travel plans to your social media interactions, creating a unique profile for your bank to provide you with bespoke services.
That's very interesting. The heritage financial services will vanish. Only 20% will stay. That's a food for thought, especially for bankers. They have to understand no more it's a conventional banking. Financial services is getting redefined in multiple form and substance. Technology companies, telecom companies, there's an absolute convergence between banking and technology. That's what we realize. The game is completely changing. That's why, even when it comes to economic solutions, we restructured the debts. The remedial management has been done. Debt servicing capacity has been redefined. But also have to realize redefining the business model. And that's the conception we have to understand. That reorganization is going to stay. Now, when it comes to payment ecosystems in specific terms, the acquirers like Global Payments or Bank of America, name it, they are redefining the game. When it comes to issuers, again, whether it is US banks or Barclays Bank or Citibank, credit card associations are redefined, whether it's Visa or MasterCard or Union Pay, name it. Gateways are getting into Fine Act, like PayPal or Stripe. So extraordinary set of changes and challenges in addition to independent sales organizations, which are redefining the game. So ecosystems are changing and the payment industries are changing in multiple form and substance. Let's watch what are the changes in the technology impact on payments.
As banks begin to get more personal, so will the ways we pay. In the future, cash is no longer king. Instead, paying with your phone or wearable will be the status quo, rendering physical cards unnecessary. 60% of financial organizations are expected to make wearables a common payment method. Physical shops will still exist, but the way you pay will change, with money changing hands virtually, in real time. Cryptocurrencies may rival cash, with an estimated 200 million blockchain wallet users by the end of this decade. And many currencies could digitize and even decentralize, simplifying travel and trade.
That's the essence of it. Simplifying the whole business model. Empower the customer. Give him the kind of experience he deserves. So what are we resolving by this clip? We say providing a seamless and secure payments. That's very important. Second, more and more integration. Platforms are getting connected. Solutions are coming together. So collaborations are happening. Data is the most valuable resource and digital wallets. And that's mind-boggling numbers. As we speak now, it's around 5 trillion. That's the market. It's going to scale up to over 10 trillion in the next 4 years, not far. So that's what the change we are talking about. It means you have an open banking in the making. What's it all about? Let's watch this clip.
Over the last decade, large and successful digital players in various industries have used open application programming interfaces, or APIs, to connect their services with apps and websites of third parties. Today, open API technologies have evolved to an extent that allows them to be applied by the financial services industry, where security is key. This opens up new opportunities for banks and other financial services providers to offer innovative digital services themselves. The emerging business model, open banking, empowers end customers to control and share their personal account data with third parties of their choice through offering a new range of products. As a result, financial services become more relevant in the digital space for end customers, and compliance with new regulation is made easier. By embracing open banking, banks can build on their key assets, trust, reach, and know your customer to grow digitally.
That's what it is. So open banking is a gateway to a new kind of payments we're resolving. And again, Visa tabs with FinTechs focused on open banking. Our colleague will explain that. So what I need to impress upon is to recognize that digital innovations through APIs is going, application programming interface is going to change the game. Let's watch this.
Imagine expanding your reach and monetizing your bank's data. Imagine bringing services together and delighting customers. Imagine creating new opportunities in revenue quickly. Today, you don't have to imagine, but you do need to think differently. In the new digital economy, customers want services delivered conveniently, when they need them, wherever they are. And APIs are the digital building blocks that make your products and services extendable beyond your branch website, and mobile app. They allow you to connect your business securely and seamlessly with partners. And that's important when you consider that more than 1/3 of bankers believe their competition is non-financial firms, such as technology and e-commerce companies.
It's happening. It's difficult to distinguish between technology companies and banks. Apple Pay or Google Pay, or individual banks' digital wallets, all complementing each other and giving the customers the empowerment. So APIs are alongside open banking, and that's the message. Add to that, as I mentioned in my preface, the role of fintechs in the payment industry. Now, it's important that we understand the role of fintechs because they play a very significant role. It's all collaborations, and hundreds of successful fintechs today are great enablers to complement the banking financial services. Watch the screen.
Global investment in the fintech sector has reached almost $100 billion since 2010. If you look at 20 of the world's major economies, you will see that about 30% of their citizens use at least 2 different kinds of fintech services. In China and India, over 50% of consumers use tools like money transfers and borrowing and financial planning services, which are part of fintech. Many businesses whose models were based on the use of cash are adapting to the change. More and more, the traditional banking payment services that baby boomers grew up with are changing. Today, it's not unusual to see iPads equipped with card readers, retail outlets and services that only exist online, or people paying bills using e-transfers. The rise of peer-to-peer payment platforms has meant that people can make payments without going through a bank or using cash. It's made paying for things more convenient, especially online. However, fintech payments also have their issues. As more payment systems go digital, cyber attacks become a bigger risk. Digital currencies like Bitcoin are not accepted in most places, and their value can go up and down like a yo-yo. Fintech is changing the way the world operates financially, and the opportunities are exciting. Nevertheless, its challenges are real, and they're only going to get bigger as more of the world embraces it.
Absolutely mind-boggling, whether it's PayPal or Stripe, TransferWise, HeadNote, which gives you the legal support of Flywire, or Venmo for that matter, are all happening. Again, let's move on to the transaction banking, which is also equally important. The next few minutes, 3 to 4 minutes, I'll be completing it, and I'll ask the rest of my fellow speakers to dwell on their focus from their perspectives. Now, on the transaction banking, which is essentially the new world order now when it comes to financial service, watch this clip.
Every day, billions of transactions are made around the world. Transaction banking is like the plumbing of the financial system, making sure money flows to the right places in the right way. The extraordinary amounts of money involved make transaction banking one of the most critical parts of the industry. Transaction banking moves everything from cash and bonds to shares and securities, quickly and securely, streamlining complex processes and making sure that clients' money is available to them when and where they need it.
That's what it is. It comprises of cash management, trade finance, and again, when it comes to security services, it means the business. The focus due to trade, liquidity management, and security services, security management. And that's what we need to articulate in substance. So payment, cutting through cash management, what does it mean? Here's a clip.
The payments industry is the most innovative it has ever been. The way corporate organizations can pay and get paid is evolving rapidly, more so than ever before. As a treasurer, your role is expanding and has a greater strategic importance, while still being responsible for maintaining cash flow and liquidity. Technology is an enabler of change, and you need solutions that support visibility, security, speed, connectivity, and efficiency. Payment hubs, with SaaS-based payment and cash management platforms, need to work at real-time speed to enhance and meet necessary efficiency standards.
That's what it is. Efficiency standards. And it means you have to empower the customer, and you have to have a dynamic cash flow forecasting, which can clearly see the way we can administer the various contingencies and measure the overall opportunities in terms of liquidity management. That's this.
Data has become a part of our daily lives, and using it to navigate decisions about the future feels just as natural as driving a car. We all know that cash flow is basically about ins and outs, but do you know what your future cash flow looks like? Getting an early overview can be of great benefit, as it enables you to act before anything becomes out of hand. For instance, if your short-term liquidity is tight, you could consider actions like changing the location or currency of your liquidity, chasing outstanding payments, or asking to increase your line of credit. Similarly, if your medium-term liquidity is likely to become tight, you could explore solutions such as faster invoicing, shorter credit periods for customers, or even streamlining your purchasing process. On the other hand, if you have excess liquidity, a forecast could help you consider investing. Either way, it should be easy to generate a forecast, even if you're not an Excel expert. With the cash flow forecast tool from Danske Bank, it is. Simply choose the timeline and settings for the forecast best suited to your purpose. The forecast can be created with the different currencies used by your business. You simply select the accounts relevant to your forecast and include information from any accounts in other banks. The tool will automatically update forecasts, comparing actuals with your predicted calculations. It can provide you with historical data for insight and comparison, all in your preferred view. You can even create aggregated views across subsidiaries and currencies. So get in control of your cash flow and be better prepared for the future.
That's the bottom line, getting control of it, optimizing it, make the best use of your money. It means a good treasury management. And how about the payment hubs and treasury management, how they will complement each other. Again, look at this last one.
You can thrive in this new, open and connected world. Operate globally and locally, make faster domestic and cross-border payments, improve banking relationships, reduce the complexity of multi-banking connectivity, and adapt to more open banking environments and API adoption. And with centralization a core element, payment hubs drive greater visibility for today's treasurer. Real-time dashboards and reporting provide fast and reliable payment tracking to drive decisions around short-term liquidity forecasting and working capital optimization to support growth. But you also need to keep your money safe. Proactive and intuitive security technology monitors and analyzes the payment lifecycle and user behavior and effectively screens against sanction and money laundering risk.
That's what it is. It means you can use secure, reliable, and efficient way, and you have to have enterprise risk integrations. So you have to be complying with the universal framework, including anti-money laundering and combating financing terrorism. Domestic and international solutions are available. Technology is a tool to assist the cash management, and that's precisely we are going to showcase today. The fellow speakers are there now lined up to showcase what exactly the opportunities are all about. To enlighten you, let me have the pleasure of inviting. I just given you the big picture, the concept note. And I'm here to listen to the fellow speakers and see how we can interact and proactively respond to the market requirements. Any of your questions will be answered by me and my panel.